Hello and welcome to this session. This is Professor Farhat, in which we will keep discussing SOC engagement. SOC stands for Service Organization and Controls, and SOC engagement is a form of attestation engagement. What's an attestation engagement? An attestation engagement is when you hire an auditor, a CPA usually, to pass a judgment on something, just like an auditor audited financial statements. Here we are auditing something else other than financial statement, and that's what a SOC engagement is. We could be auditing or engaging to audit to pass an opinion on the internal control over financial reporting or on the system, the internal control system of a company, using certain criteria. But this is what a SOC engagement is. In this session, we'll start to discuss how the auditor responds to the assessed level of risk that we discussed about in the prior session when we assess risk. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses, broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today.
So once the service auditor has agreed to undertake the engagement and completed the initial planning and risk assessment, which we see in the prior recording, the subsequent event of the engagement require what? Understanding the system as outlined by the service organization. So now we are ready to look at the system, try to understand the system. And this system is who talks about the system? The company, the service organization. There are key phases in the engagement performance. So when we start, just like when we have a financial statement audit, we go from A to Z, from the beginning till the end. Same thing with the SOC engagement. We're going to start first by addressing the identified risk from the risk assessment step. We're going to assess whether the management depiction of the service organization system align with the description criteria. We have to assess that. That could be part of our assessment. Gather and assess evidence regarding the adequacy of the control design, whether the controls are working properly. Gather and assess evidence concerning the effectiveness of the control and operation, type 2 engagement, and those two are type 1. And I hope you know what type 1 and type 2 by looking at those two statements at this point in your preparation. Review the outcome of the procedures, then form an opinion, go ahead and issue an opinion, and that will be the final product. So in this session, we're going to look at one step only, and that's how the auditor addresses the identified risk, or simply put, how do they respond to the assessed risk, to the identified risk, assessed risk. So remember, when we conduct an audit, we have to obtain sufficient appropriate evidence. The concept of sufficient audit evidence refers to what? To the quantity and the quality of information that the auditor collects during the audit. So what could be this? What should this evidence look like? It must be adequate. Adequate for what purpose? To support our opinion, to support the final product that we are going to be reaching. So typically the evidence will include records, document, other information obtained from the service organization, or it could be external documents, external evidence. The goal is to gather enough evidence so that the auditor is comfortable enough to make an informed professional judgment about the reliability of the service organization controls and processes, because that's the job of the auditor, is to pass an opinion about the service organization controls and processes. Now, how can the service auditor, reduce the attestation risk? Attestation risk, think of audit risk. And that's why I keep saying that don't take the ISC exam, Information Systems and Controls exam, unless you took the traditional audit exam, CPA exam, the auditing part. Why? Because in the audit, we talk about the audit risk model. We talk about the audit risk. And we want to reduce the attestation risk, which is the audit risk from a financial statement perspective, to an acceptable level. So what is an attestation risk? In concept and practice, it's the same as an audit risk. It's the risk that the auditor might issue an opinion that is not appropriate when the information subjected to an attestation is materially misstated. So simply put, the auditor, and this is the true risk, is issuing an opinion that they give unqualified or unmodified or a clean opinion, while in reality the controls are not functioning properly. So this is the attestation risk, is issuing the wrong opinion, and usually the wrong opinion that everything is good while it's not working. So reducing this risk involves rigorous testing. So if you want to reduce audit risk, or if you want to reduce attestation risk, what do? You do more work. Reducing these risks involve rigorous testing, more testing and validation of controls in place at the service organization. The more work you do, the lower should be your audit risk, because this is how you lower your audit risk. You do more work, you do more field work, larger samples. By ensuring that attestation risk is low, the auditor can be more confident in the reliability of the audit finding, because if you can lower attestation risk by doing more work, you are more confident in issuing your opinion, because at the end of the day, you are only obtaining reasonable assurance. Why reasonable assurance? Because you don't look at everything. It's impossible. You sample. Therefore, it's only reasonable assurance. Therefore, when we talk about reasonable assurance, it represents the highest level, don't get me wrong, that the auditor opinion is free of material misstatement. It's the best opinion that we can give, but it's not guaranteed opinion. It's reasonable. It doesn't mean absolute assurance, which is not achievable in auditing due to inherent risks such as the use of sampling and the need for a judgment, because mainly for those two reasons, we cannot give absolute assurance. So reasonable assurance is achieved when the auditor has performed enough procedures to be reasonably confident in their opinion about the effectiveness of the control. The procedures chosen, in other words, how we conduct the audit, are directly responsive to the auditor's risk assessment. What does that mean? This means that if the risk level changes, or if new risks are identified during the audit, the nature, extent, and timing of the procedures may also need to be adjusted. So we need to always be flexible in a sense to change our methods, change our technique in response to the assessed risk. But it's a responsiveness. It could be changing. As we start the SOC engagement, we may find out that this client is riskier, or we may find out actually it's less risk. The goal at the end of the day is to remain sufficiently flexible and responsive to effectively address the specific risks of material misstatement identified in the service organization operation. So that's the goal. So these steps ensure that the SOC audit is both effective in its scope and rigorous in its approach. For what? To provide the stakeholders with confidence in the accuracy and the reliability of the audit results. So therefore, what you have to be flexible and change your responsiveness to the assessed risk also during the audit. Now, when you design and perform further procedures, when you do work, based on the risk identified of the initial response design, the auditor further tailored audit procedures. So first you start with, okay, this is what I identified, and you will tailor your audit techniques, your audit procedures to be effective as possible. But again, this will change. But initially, those additional procedures are based on the assessed risk. And these additional procedures are characterized by the nature of the procedure, the extent, and the timing, the net. The nature refers to the type of the procedures to be performed, which could include inspection, observation, confirmation, or analytical procedures, depending on what you are doing. The nature. The extent involves the volume of evidence. How much evidence am I going to collect? Higher risk areas will require more extensive testing. And the timing, when, refer to when these procedures are performed. Some may be conducted at different stages of the audit or at specific time when the information is more relevant and reliable. Now, also, we have to look at factors that influence the level of risk. What are these factors? Well, one of them is the threshold of materiality. How much can we tolerate? What's materiality? We had one whole section about materiality. The higher the materiality, the more we would accept, the more we will accept in terms of misstatement without coming to the conclusion that the controls are not working, or for the financial statement, the account is not fairly presented. So depending on the level of threshold, if your materiality is here, you will accept more than if your materiality level is lower. Also, the service auditor's assessment of how effective the control environment. What's the control environment? The tone at the top, at that company. Management, their culture, their cybersecurity culture, how much they value their internal controls, their control system, their control objective, how involved are the board of directors in addressing issues with controls. The more they are involved, the more comfortable we can be as an auditor, because control environment control everything else. And we have to look at the aspect of internal control that relate to the services provided to user entity and business partners. We also want to look at what internal control do they have in place that relate to, at the end of the day, to the user entities, because that's what the users entities are looking for, looking to see, do they have controls? And those controls are in place, so we are comfortable doing business with them. Now, how would the auditor respond to significant areas, risk in significant areas? Well, the first thing we have to do is maintaining a culture of professional skepticism. What is that? It's like basically having a questioning mind. Yes, accept, verify, question. You always want to question everything. So for example, during an audit of a company that recently implemented a complex information system, the auditor encourages the team to question the integrity of automated report and to verify them against source data. Why? Because it's a new system. Therefore, we have to be skeptic. It's new, then, let's do a little bit more work. And this makes sure that the team member don't just accept the system output at face value, but instead maintain a questioning mindset. And that's the professional skepticism. Keep a questioning mindset. Also, how else would you respond? If there's more risky areas, complex areas, assign more experienced staff or use specialists. For example, in an auditing of a financial institution that deals in derivative trading, the auditor assigns staff who are experienced in those financial instruments. And who knows, we might bring an outsider that have a special knowledge, derivative expert, to help assess the valuation of complex trades. And this makes sure that the audit team has the prerequisite knowledge and skills to understand and evaluate the specialized nature of the transaction. What else can we do to respond to risks in significant area? Provide additional supervision over audit procedures. In other words, just make sure people review the work. Incorporating element of unpredictability in the selection of procedures. Don't allow the client that's being audited predict or guess how you're going to conduct the audit. Incorporate element of unpredictability, because if they know or they can predict, they can make sure everything looks good. And make changes, which is related to this one, to the nature, extent, and timing of the procedure, depending on what is needed to achieve a comfort level that you are willing to issue an opinion with minimal risk. Let's take a look at this multiple choice question from farhatlectures.com. Why might an auditor change the timing of the audit procedure? Is it to comply with legal requirement? No. This is an audit procedures that's under the discretion of the auditor. It has nothing to do with any sorts of external legal requirement. To coordinate with fiscal year end. It doesn't matter whether it's a calendar year or a fiscal year. The auditor might change the timing of certain audit procedures. That's be out. To address identified risk of material misstatement. Would that be the case? Yes. So the auditor might change the timing depending on the nature of the evidence they're looking at. Certain evidence are best, for example, looked at as the control is in place, or certain evidence is better looked at the end of the year, certain evidence throughout the year, certain evidence at one particular transaction. Therefore, to address identified risk, yes, we do change the timing. C, so far, is the best answer. D, to manage workload among staff. That's not why you change the timing. The goal here is to identify the risk of material misstatement and audit them the most effective way, not to worry about the workload among staff. What should you do now? You want to go to Farhat Lectures, look at additional MCQs. That's going to help you, especially if you're studying for Information Systems and Control exam. Invest in yourself. Good luck, study hard, and of course, stay safe.